All right, welcome. Thank you for joining us. The Stealthy Rich. Here's our first video on YouTube. We're sharing here our cash flow and asset performance tracker that was just released. This is our homegrown spreadsheet that we use to track all of our properties, all of the cash flow in and out, all of the asset performance, a couple other cool things. And we're sharing it with you all now that it's ready. We've had so many people ask us if we have such a thing, and here it is. We've tried all the other online tools and web tools and cloud-based, and they just haven't cut it for us. We needed something simple yet effective, and so this has got everything we need and nothing we don't. And this is best used within Microsoft Excel. It'll probably work in Libre or OpenOffice as well, but it will not work in Google Sheets because it has a lot of sweet macros and VBA that helps us do the heavy lifting. So let's dive right in and see what. Hopefully, this is something you can use. And after looking at this video, watching this video, you can decide if you would like to download a copy from our website. So let's dive right in. When you first get the the workbook open, you'll have these few tabs at the bottom. There's a totals. That's your dashboard. That's where everything is driven from once you have properties in there. And then we have these three orange tabs, which is just example data for you to understand how it should look or how it could look. And then finally, the yellow one here is the instructions, which we can view in a kind of a linear format, all the instructions and the gotchas and what you should or shouldn't do. On this totals, please don't add or make any columns or rows that could throw off the macros. It will do all of that for you. So let's dive right in. So if we go to the example totals, that's a copy of the totals, but with some data already in it. We have some sections that we'll go over. So first here is the property details. This has obviously your properties. In this example, there are two properties, 111 Maple and 455 Cherry, which we'll talk about, and they each have their corresponding property uh, tab as well, or worksheet. And this is where we track the cash balance. So what this means is this: if you think of your property or each house as has its own bank account, this is what that value would be. So if it had its own cash basis accounting, this is what it would be. And that's very important to track. Then over here we have our asset performance. So this tracks how much the asset initially cost to get into service. Could be a down payment, rehab costs, holding costs, hard money costs, whatever can go into that. And then this is how much it has returned thus far based on income and uh, and rent and whatnot. And then this is your total ROI, so return divided by cost. And then when you bought it, how long you've held it, and your average monthly return each month that you've owned it. And then this would be your total annualized return. And then over here we have our mortgage payments. This is for your property, we like to track when it's due, how much it is, kind of at a quick glance. That's where all that data we just manually put in there. And then over here is our insurance schedule. Same thing. We have 60 plus properties that we track, and we want to know when the policy is effective, when it expires, and what the premium is for said property. And then finally, over here to the right, we have, if I can scroll over here for us, we have our lease tracking. So this is where we track each property and when the lease ends, how much the rent is currently, and then once we get closer to the end, we'd like to track, well, if we raise the rent, what would it look like? So these are kind of the extra boxes we use, but at a glance helps us get to where we need to be. And then over here we have the totals of all of these fields. Once you have many properties, it's good to see at aggregate what's going on. And your actual contributions here is the contributions. This is if you've put some money, your own money into the system. That's where this would show. So right now we have one house that is 19,500 in the hole, and another one that's positive almost 2,000, and we'll explain why that is in a second. So that means we have a balance, our ending balance of 17,000 or 7,000 once you figure in the 25,000 we put in to begin with. And so what that means is right here, our ending balance section, this is where the magic happens. So where this is your checking account and maybe a savings account, you can add other rows here if you've got more business accounts that you use. But this total here, this $7,619.35 should always match, if you're doing good quality accounting, should always match this number, which is the total cash balance of your properties. That way you know where every dollar that you've spent and every dollar that you've earned has a house, has been assigned to a property, and has a home. And there, that way you know at a glance which properties are doing well and which ones are dogs, are not doing so hot. And so it's very important to us. We love the quote, what gets measured gets managed. And that is so true for us. We like to measure every dollar so that we know where we need to make improvements or where we need to make changes on our properties to make sure that they're performing in the way that we would hope. So you want this number to match this number once you've done, once everything's settled in your bank accounts and you've uh, tracked all the expenses, which we'll get to in a second. That's where it should go. Then this right here is the cash position. So each month you can tell how much money from a cash flow perspective you made or lost. So you can see here in 2020, these are just two fake properties we put in February, we made 850 bucks. January, 1500, 1400. And so why that would change, that would be because maybe someone didn't pay rent, we had a vacancy, we had a repair we had to pay for. So those numbers will always change. And so our worst month is always December. Hasn't happened yet. That's why there's no data here. But that's when we typically have to pay taxes and the HOA and all of those fun things. And so it's very negative in December. Very sad, even though it's Christmas time. So, but the total for the year should be net positive, and that's what we're hoping for. And so we've given you here 4 years of automatic cash flow tracking that should be helpful for you as you watch your properties hopefully build wealth for you. So that's kind of the totals page at a glance. Let's dive into the property now. So what drives all this data on this example totals page is what's on these property pages. So let's look at 111 Maple here. So let's go to the top. So we've got the property address. We've got when it was purchased. These are the initial purchase information. So we've got some earnest money, a down payment in this one, in this case, some closing costs, insurance costs, wire fees, and that totaled 23,000 and some change. And then here's some holding costs before we rented it, a little utilities. We had to clean it. Not very much in this case, 332. So a total of $23,763. That then becomes a negative that feeds into that totals page, right? So that is what we are negative in the property. Then starts the real magic, and that is each month here we have income that we can record, and we have expenses. And this is where you record those types of transactions. So in January, nothing happened because we didn't have the property yet. Because if you look at the top, we bought it in January. It took us a month to get it ready. So let's just be aggressive and say we had a tenant for February. That means we had rent 1350 and we had a mortgage for 501, which then left us with $848.50. And that would then flow through to our total sheet. And then each month is like that. And then if you have repairs, you can come over here, or extra income, you can come over here on an insert row section. I just put the insert row there so you know where to put it. And you can insert a row, label your expense or your income. So in this month of April, we collected $13.50. We also collected a $50 late fee because they paid after the 3rd. And we had an electrical repair that was $150. And then we paid our mortgage. So in that month, our take home was only 748. And then you can see the next month is even worse. We had some plumbing, we had a pressure wash. It was only 523. And so we just do that each month, whether you do it daily or weekly or monthly. Record your expenses, record your income, and over time, you'll then get to have these, uh, you know, ROI calculations and your monthly return to let you know if this property is actually making you money or is actually helping you build wealth, along with return calculations and whatnot. So this is very important for us to track. We love it. And so, as you can see here, we'll do 455 Cherry. In this case, we only paid $1,000 in earnest money. We paid cash $85,000. But then you see at the bottom, we got a loan back out for 93. So the bank gave us $93,000, which meant we were in we were negative $5,700, or we had our $5,700 extra after buying this property. Well, then we had some holding costs, which totaled 7,000 to get it ready. It was kind of a junker, we'll say, and our total at the end of that says we had $1,344 left in that property. So our beginning balance was only 1,344, and as you can see, if we go back to the totals, that's why our ROI is through the roof, right? And so that's why that's a good example of a BRRRR property by uh, rehab or rent and then refinance, right? That order. And we got all our money back out in that one, in that example. And so you can see how the ROI changes drastically when you do that. But that's just, we just put those two examples here. But so these are the kinds of data that we like to look at on a daily basis to know if we're having a good month, a bad month, a good year, and whatnot. But this is how we track our wealth. And we'll give you an example here. If we look at our own spreadsheet here, we blurred out the addresses, obviously, but you can see here we track the exact same things: the cost, how much is returned, the ROI. If you see a negative ROI, it's most likely because we have no money in it, and you can't really calculate a return on investment if there is no investment. And so we like these negative numbers, but you can see some of these properties we've held for 40, 50, 50 plus months, and how much they've returned per month, right? And some of them are low, but this does not include principal pay down either. This is just cash flow. And so, but gives you an idea of how well your properties are performing. So with that, we hope you enjoy this spreadsheet and that it will be something that can be helpful to you and your real estate business as you start to build wealth and get into real estate. It has really been a bridge for us to track all of our expenses and our income and to make sense of the data that on a daily basis is coming at us. It gives us a place to store it all and historically look back and say, hey, you know what? 111 Maple, after, the 6 months, let's say it's going to become 36 months in another 3 years, we can see, how well did we do per month on average? Is this a good investment? Should we sell it? Oh, wow, it's done great. Let's keep that tenant, whatever. Those are the kind of decisions you can make once you have this data at your fingertips. So we hope this has been helpful. There's a promo code in the description. Um, and some for our earliest listeners and our earliest followers that you'll get. Hopefully, give you a little break on the initial price. But please go download it if you find this helpful and give us a thumbs up on this video. And hope you have a great day and stay healthy out there.